Every day we are in for a different ride altogether. So before starting, or I have few slides to share, I will just take you back in history just to connect one incident. Long ago there was a kingdom called Lydia, which was then ruled by a king called Croesus. It was again a very rich country at that point of a time. In Middle East, it was where it was situated. Lydia's king Croesus thought of invading his neighboring country, which at that point of a time was called as Persia, which is the current Iran. So this king Croesus, being a superstitious person, he checked with his oracles to know what would be the time to attack the country like Persia. So the oracles gave back the message saying that if he goes against war with Persia, it would end up destroying a great country like Persia. So he should have a second thought of it. But Croesus, being himself, he was like, no, I would not care that if Persia is destroyed, I would want to go ahead with the war. So eventually the war happened, and then the result was Lydia got destroyed, and the history is that Persia, which is currently Iran. So what I wanted to connect is on what Trump has started. He has his own problems at his hand, but he's trying to get into a war which was of choice, and he's creating all this. But what is the positive we have to take here is that he has given us a good opportunity for investors as such. So we would look forward to the positive signs of that. So this is the situation, right? We are in a situation where what to focus on. There are many moving things. You have oil, you have tariffs, you had FIs selling on one side, you had gold prices, you had silver prices moving. So what to focus on? But whenever there is a turbulent phase, when it is like what to look, we are not seeing a clear future ahead. There's a lot of confusion in the market. What we look is at the history. So we can't obviously see what is ahead of us. Nobody can predict the future, but what we can take is the learnings which we get from our own history. And in this case, the stock market, how they have behaved in more or less in the similar situations in the past. Before that, I would also say what holds us all is the behavioral aspects of us in terms of distributors, advisors, the investors. No matter what is your knowledge, at the end of it, there are certain situations which would say the behaviors is the aspect which holds better at certain point of time. So I would want to quote a great man's quote over here: behavior is always greater than knowledge, because in life there are many situations where knowledge fails and behavior can still handle. This quote is from the great man, Dr. APT Abdul Kalam. So this particular slide shows a bit of what we have endured in last 27 years. In 27 years, we had only five instances wherein the Nifty was negative. At the year ending, we had positive across all the other years. So no matter what is the volatility, you have green shoots at the end of the year. That's what we can see here. And what is at the current market, in terms of valuations, it has given, as I was telling you, it has given opportunities across market caps. Your valuations is at the average of the Nifty 50's last 1 year forward P. How different is the mutual fund categories at the current juncture? You have all the market caps which are corrected to the tune of large cap for about 5 to 6%, mid cap to about 5%, small cap close to 6%, flexi cap to about 5.5%, and multi cap to about 5.7%. So the expert's view is to stay put, if possible, add on to your portfolios in whatever way. If it is STP, SIP, please add on to that is what this juncture. If you take the data from last September 24, wherein we had started seeing good amount of correction, and that from there onwards it's been a very range bound on how it has happened. You can see the changes across the Nifty mid cap, Nifty small cap, across you have seen the valuations change. There's a good amount of corrections which have happened, and it would actually give us an opportunity to get into the market at this juncture. So what has done, as I was telling you, what are the learnings for us in the past in terms of the previous similar scenarios, and how fast have we been able to rebound from that particular scenario. So Gulf War, which was in 1990, had a market correction of 14%. The correction duration was about 36 weeks, and the 1 month return post the correction was 26, and 3 month to 39 and 65. Similarly, the Kargil War, which had about 11% correction in the markets, it went on for 6 weeks. 17%, 33%, and 40% was the thereon after the market started rebounding. So that is what I was trying to say here. The correction duration is mentioned there. 36 weeks for the first period. That's the duration. Yeah, that's the duration where it had corrected.
No, that is correction duration.
That is what it is. The correction duration is what the war's duration is. Yes, yeah. Yeah, that's where I have mentioned it is the question mark.
No, market correction.
The market from there, it started going to the positive territory is what you have marked. So what is that we have to look forward to? The positive signs of what we have to look at. India has one of the largest startups in the world. In 2016, it was about 500. Right now, we are at 1.6 lakh startups in the country. That is the opportunity which is there in this particular country in terms of what we are looking ahead. What is the starts to post is the opportunity which is lying in front of us. 141 crore of population. We have 120 crore internet users, 114 crore of mobile subscribers, 95 crore enrolled voters, 80 crore e-commerce users, 65 crore smartphone users, and 52 crore health insurance users, 50 crore of OTT users, 46 crore of social media subscribers, UPI users of 30 crore, food delivery app users of 28 crores, stock market 9 crores, but just look at the mutual fund penetration which is at 4.6 crore. So that's the opportunity which we have in front of us. So we have quite a bit to cover, and all these ups and downs in the market is only an opportunity to get into the market and get the investment. So what has happened, you could see the penetration of Aadhaar and the kind of usage and connected. Without Aadhaar, you are not going to do anything in the tech side of it. So Aadhaar is connected everywhere. What has Aadhaar done? In the month of September alone, you would see that close to 26 lakh crore of transactions were made through UPI. In November, it was again 27 lakh crore of transactions which are made away. In 2016, if you take about 10 years back, the number of transactions done on online platform was only 20%, and that is now turned to the banking transactions which I'm talking is now to about 80%. That's the kind of change the revolution of using tech in finance has brought. What are we looking at? How are we growing is what I have been showing here. It is It is on the increase of the lower income cadre moving gradually, and the population is getting more and more populated in the middle class spectrum. So that's what the projection is. 2015 it is 349 lakh crore, and in the projection for 2046-47 it is going to be 1050. That's the projection which we have. And what is going to lead to that? The per capita income. The per capita income of the country has reached $2,449, and we are going to see a spike, and the projection in 2030 is going to be close to $4,800. So what does this do? So what is the comparison which we can take? The similar countries, similar developing countries, what has happened post this breach of $2,400, $2,500 per capita? So this is a graph which depicts the change which we have seen in China. China, how it has moved post that breach of $2,500 per capita income. From there, how it has moved. And similarly, what it has done to Chinese market in that period between 1999 to 2005 and 2006 to 2000, in the 6-year period between the movement of per capita income moving, how the changes have come in. So in 2000, in the 6 years between 1999 and 2005, the food, beverage and tobacco liquor has moved up from about 16%. In the next preceding 6 years, it moved to 25%. Clothing, footwear, textile has from 15% to 26%. Cosmetics moved from 20% to 22%. Jewelry from 9% to about 37%. The household, electric and video appliances moving from 13 to 20% respectively. So this is the kind of change what they have seen, how the market has picked up, the consumption oriented pickup, which was a big increase in those economies at that point of time. This is again depicting the similar number wherein the BRIC nations, how they have fared when we had breached that 2,500 mark. China per capita, when it breached that mark, the auto sales accelerated 5x in the next decade. Russia, the retail sales doubled over next decade. In Brazil, the premium consumer category goods had seen a big increase post that. And in South Korea, you had seen the retail sales leaped 4x over the next decade. So this is something which we have seen across the similar nations when that breach had happened. So that's the projection which we also have for the country. So all said and done, what has the downside of equity markets done? We had similar market fluctuations across. This is a data from about 1980 till about 2025. Each year, how much has the market moved down, and from there, how has it recovered? You have almost, there has been 10 to 20% decline in the market over a particular calendar year, and from there, it has turned positive in 80% of the times. The markets have rebounded to give positive returns at the end of the year. So that's something to look forward to. Irrespective of the market fluctuations, stay put into the market and you are going to reap the rewards. As the Bajaj AMC at this juncture, we came into existence in 2023. That is when we started launching our schemes. Post that, we had a very particular way of following. We had very differentiating philosophies and fund management style. So what we started doing is we can classify into 6 differentiating modes. InCube, which is our own behavioral finance concept which we have, which is a timeless concept in investing first and only player owning the space. We have Megatrends strategy followed in our schemes. Most investing is also prone to be an edge in the fund management side of it. We have built first in propositions, like we are bought our own digital properties in place, which is a client acquisition tool, which is an SIP tool, which we have also launched. We have given tech. We are the few AMCs who have not launched an app, but we have a very prudent, very strong WhatsApp transaction platform. You can do end-to-end transactions in through our WhatsApp. I am talking about as good as onboarding a client, which is through a KYC bot. You can do a KYC on our WhatsApp platform. You can get it validated as soon as we have seen examples of getting validation done in within 2 hours time. And you can onboard the client. It's like you go sit with a client, before the tea gets cooled, you are able to onboard the client and make him invest. That's the kind of strength we have brought in the WhatsApp platform. So I would urge, if you are not aware, I would urge, please do get in touch with my team here. We have my team present here. Whenever we have a break, please do get in touch. We will have that having demonstrated to you. So we have imbibing leadership qualities and client obsession as our priority. Maintaining quality, reliability and innovation is part of our building the brand and the legacy. Bajaj as an entity is not new to the country, but yeah, we are new to this AMC space, but we are making it our own. It's like, in a lighter note, the MD says that we are a tech company in the mutual fund business. So we are redefining the use of technology in mutual fund space. Again, to reiterate what the Incube specifies is information edge, the quantitative edge and the behavioral edge, which is the composition of the entire fund philosophy which we follow in selecting a particular strategy and having the stock selection done. So we have the ideas depending upon the market. We hold both the ideas, whether it is top-down approach or the bottoms-up approach. We would align it according to what is the requirement of the market. Analyzing ideas, this is the filtration which we use, business, management and the valuation side of it. And allocating in terms of the funds in terms of value, growth and the quality of the portfolio. So in terms of the size, we have invested a lot in our fund management team. We are among the top or rather the largest investment management team. We are a 26-member team currently and increasing. We have close to 22 schemes which we have already launched. Some of the key schemes have been mentioned here with the styles. FlexiCap was our first fund in the equity space which we had launched, which is around 6,000 crore plus currently, which is about 2.5 year plus into existence, which is also there in the top quartile of FlexiCap category. We have large and mid-cap fund which follows a moat investing strategy. Quality investing would be the style. Balanced advantage fund, which is a fundamental and sentiment indicator, is what we follow as a strategy. Active allocation in that. The multi-asset category is a dividend yield, or we follow a concept called GDP there. It's a value investing. A large cap would be a high conviction focused, very concentrated portfolio which we focus in the large cap. And we focus the multi-cap, which is over and under reaction with a contrarian approach in that. Across the portfolio, you would see hardly at an average about 35% would be the active participation or the similar kind of stocks which are going to be there in the portfolio, which is as low as 35%. And in terms of active market share, we would be around 65% at an average across our portfolios in terms of having the active market share. So that is a differentiating factor which we bring into our portfolio. So this again to reiterate what we follow in our FlexiCap strategy, the trends, which is technology, regulatory, economic, nature and demographic, social. We map every stock picked in the portfolio in these aspects and diligently publish that in our fact sheet. If you look at our fact sheet, that in itself is the differentiating a factor in the mutual fund industry, wherein our style and the philosophy is mapped and it is published on year. Just to give a sight of what we do, this is what the trend mapping, this is the sheet which you will find in our fact sheet, that how the mapping is being done across different stocks in terms of the trends mapping. Just a snapshot, what is the current portfolio breakup like? We are almost close to 60% into the large cap space, 25% into small cap, and 17% into mid cap. And the active as I told you, the active share on the portfolio is around 65%, and portfolio overlap against our other portfolios at an average of 35%. The large cap fund, which follows the concentrated bet, and just to have a small example on what a pure Nifty product would do. In 2016, when somebody had invested 1 lakh into just a Nifty index fund, the value as on date or as on last December or rather the March 2025, it's at 3.5 lakh, which is a 13% CAGR. And when you had a market volatility, there was a deep fall as big as 45%. Years of returns were negative. About 3 years you had hardly any returns on this particular. Somebody who had stayed put in a particular fund had made this kind of a return. So you had multiple events during that period: 2016 demonetization, COVID-19, US-China trade war, rising NPAs in Indian banks. All these things were part of that particular period, but at the end you had a CAGR of 13% made in that period. So stay put. Large cap also offers a good opportunity to get in your investment at this juncture. So this again is to reiterate what happens when you stay long in a particular fund. 74% of times Indian equities have doubled in 6 to 7 years. 80% of the times Indian equities have tripled in 10 to 11 years. 76% of Indian equities have multiplied more than 4 times in 12 to 13 years. So the longer you stay, the better you make. These are the data which we can put across from history to stay positive at periods like this. Again, how we have our large cap portfolio. Large cap portfolio mapping is done in terms of scale, cost, distribution, execution, profitability, manufacturing, and sustainability. This again is the philosophy and the style which we follow in large cap fund. Just a breakup, it is a pure large cap, almost 96% plus into the large cap, with the top industries being bank, consumer durables, pharma, technology, automobiles, telecom, petroleum, power, cements, finance, and the construction. Small cap, one of the most diversified small cap funds in the country. I would take one bit of it. We have a very particular, I would say, a profile in our fund management team called forensic officer. His job is to go through in detail into all the portfolios. What we are seeing, why, is that when we started constructing the portfolio, we saw that we have a universe of close to 900 stocks which had corrected from its peak to the extent of 20 to 80%. So it is very, what is it, I mean, it's a lucrative proposition when you have so many stocks getting corrected that from where you want to build. But when you look at the hindsight, in the previous last decade, you have seen most of the stocks which are part of the small cap, how much have they moved to mid cap to large cap? You are only about 20 to 30%. 70% of them have moved to micro cap. So it was very important for us to select the right stock and mostly avoid the wealth eroders. So that was the part, and we have multiple layers of screening which we do, and the forensic officer has these many. I'm not going through the detail, but he has so many filters and layers of filtration which he does before getting the stock into the portfolio. Again, small cap, you had seen good amount of corrections. We are still continuing to see good amount of correction right now, but small cap is something which we feel as invested, we will make much better return if you have a long-term view. This again, an SIP in a small cap, irrespective of market, whether it is up or down, you can start, it will hardly make any difference, and you will have that return which will be hardly different from the market peak and market low. This is the ratios which we will share Across the portfolio, we have seen quite a bit of valuations in comparison to the index. So I would request each and everyone present over here look at our portfolios, how it is valued at this juncture, and start looking at allocation. We are more than happy to assist and help you or let you have more information on this. So before closing, we are an AMC who are growing and one of the fastest growing in the country. We are closing to 32,000 crores. Thanks to each and every one present here to contributing to us in this short span. Without your support, we wouldn't be here. And we are growing on every day. Thanks for the support. Again, people who are present here, I would request a clap to yourself that we have been getting a good support from each and everyone over here. Thank you very much. Before concluding, I want to have this great man's quote again. We don't have to be smarter than the rest. We have to be just more disciplined than the rest. That's what will lead us to the next one. Thank you. Thanks a lot.